Good morning, everyone, and a warm welcome to this fantastic masterclass this morning. Looking forward to a great session. I am joined this morning by the lovely people from Gravitas Tax as well as Commspace. So I will introduce them to you in a second. But first off, a warm welcome. Thank you very much for joining us. We do like to have fun on these masterclasses, so you can expect some humor and some laughter as well, I'm pretty sure, but also some very good, serious and practical stories today. So let me introduce you very briefly. First off, the lovely Martha Kukumur, who is not a stranger to many of you probably. Martha is from Commspace. Martha, warm welcome. Do you want to share a little bit just about what you do and about Commspace before we get started?
Thank you so much, Francois. It's lovely to be here this morning. Yeah, I think a lot of the people attending today know Commspace. We're a revenue management system. We're 10 years old next year, so very excited. And we look after your revenue. We help you to analyze it, split it, understand it, track it. So a lot of insights, analytics, revenue graphs with regards to understanding where all your money is coming from.
Fantastic. But warm welcome, Martha. And of course, two other faces who are definitely not unfamiliar to many people as well, because they work really like Martha works hard. These guys work hard. We see them everywhere. So Wouter and Emil from Gravitas, warm welcome. Do you guys want to do a quick introduction?
Yeah, thank you, Francois. Good morning to everyone. Yeah, lovely to be here. We're excited for the session. Yeah, just as a quick introduction, myself and Wouter, we both practicing financial planners. We've been in the industry for about 13 years. We go way back to Stellenbosch University. Our paths kind of crossed over there, and yeah, we started together and we tried to build financial technology and really build technology that we can incorporate in our businesses. Really where we feel there's a lack in the market. So we focus on these niche areas where we really feel that we can add significant value.
Yes, as Emil said, I'm Wouter, also 13 years in the industry practicing certified financial planner. And yeah, like Emil said, all that Gravitas Tax basically does is it draws lump sum simulations on retirement, withdrawal, retrenchment, and it's not a calculator. It directly integrates with SARS. So yeah, that's our intro.
Brilliant stuff. Yeah, so for you, those of you that don't know me, my name is Francois du Toit. I have a company called Propulsion, which we are most famous for keeping people busy during lockdown. That was our initial claim to fame. And after that, many other things transpired, for which we're very grateful. But we also developed a software called TaxSpace, because obviously, for those of you that do know me, I have a background in tax, and we used to run a tax practice and obviously work with financial advisors very closely. And that sort of, because of things I promised people, that culminated now into a full-on application, which is very, very useful. Right, so thank you very much for joining us. I want to do a brief positioning of what we're going to do today, because this is going to be a very practical masterclass. We're not going to do demos. We're not going to show you anything like that. What we are going to do, though, is share real stories, because as you heard, both Emil and Wouter are practicing financial planners. So that means they're seeing clients, they're working with clients. We've seen a lot in our tax practice that's happening. Martha works with a lot of FSPs, and we see a lot of sort of challenges around, technology and sort of specifically, obviously, in their game, revenue management. And even there, I've got a few stories to share around how easily we lose out on revenue. We think we're getting it, but we're not getting it. So that's just one thing, but we'll get into that. I think most importantly, before we get started with all the lovely stories and things that we want to share with you this morning, is just to think about the technology that you have at the moment. Because for me, I'm really privileged to be able to work with a lot of financial planners and advisors and firms and so on. I've also got the privilege to work with a lot of technology providers. So you sort of get that, sort of have a broad overview of what's available. I know how people use it. We see where things are lacking and where people are struggling. But I think the biggest issue that I see with technology, because people are really starting to complain like this is getting expensive and I have to pay for this and I have to pay for that, and it becomes an issue. But have you ever sat down to ask yourself the question, what problem is this technology solving for me? Yes, I think that's a question that we don't often sit down and think about. is this technology, do I have it because I think I need it? Or is there a specific problem? And then the other big question is this either solving a big problem for me that's saving me money, or is this actually a tool that helps me generate new revenue? Like that's the other part of it, right? So you can save money by using technology, but you can also create new revenue with technology. And that's really what today is very much about, looking at those two sides of the coin. Wouter, I mean, from your side, obviously there's a reason why you guys started Gravitas Tax and saw that there's a need. But I'm really keen to hear maybe like one of your stories from where you've seen like there's this problem and how you guys went about solving that and what revenue did that generate.
Perfect. Thanks, Francois. Like we said, Gravitas Tax has a very basic function of getting that information from SARS, and as a financial planner, we then show that to clients. But as you mentioned today, we wanted to roll into two things. Specifically, how do we practically use that? So this is what today is called a masterclass. So to tricks and trades that we as financial planners use, but also because we work with a lot of financial planners on Gravitas Tax, we've picked up a lot of tricks that they use for their clients. And as you said, those financial planning niches helps the client save a lot of tax and betters their financial planning. But we also have to focus as a business how to increase our revenue. How do we build our business as financial planners? Because if we don't build enough revenue, we won't be in the industry to support our clients and give them the good advice that's available. So one of those practical examples, and we almost mentioned it on each webinar, is the excess contributions. So for clients that over-contribute over their 350,000 or 27.5% that they're allowed to put into the retirement funding, all of that additional contributions is called excess contributions or non-deductible contributions. So in this example, it was one of our financial planners were up against two other financial planners. So it was three financial planners pitching to this client. He was an MD of a company. Long story short, the two normal financial planners said you have your 550,000 that you can take tax-free. That's what we always said. And the financial planner using Gravitas Tax drew a report, and coincidentally, this client had 4 million rand, more or less, non-deductible contributions. So what he then, as a financial planner, did is he used that 4 million to put it in a voluntary purchase annuity. Obviously, there's specific rules on a voluntary purchase annuity to enhance your taxes, or you can just use a normal list for cash investment. And he used so it was quite a big deal. It was 24 million rand. Or 25 million rand, something like that. So I prepared a quick little slide to show you physically what happened there. So in this scenario, just make it a little bigger, there was 25 million rand. And all that this calculator does, it's a very, very rudimentary calculator. He put 21 million in retirement assets, and he put the 4 million in a list or a voluntary purchase annuity, etc. Obviously, each rand that you deduct from or draw from a living annuity is taxable. So this 55,000 in this client scenario is fully taxable. And the 12,000, because of the voluntary purchase annuity or because of equity-based LISPs, it was very little tax or no tax deducted off the 12,000. So the client could earn a total net income of 54,000 rand a month. And just I'm going through it very quickly, but you could see the effective tax rate in this example was 22%. I'll just run through that one more time. So there was 25 million rand in retirement assets, 21 million he put into a living or life annuity, compulsory funds, and the 4 million he put into a voluntary purchase annuity. And you could draw 12,000 rand from the voluntary purchase annuity and 55,000 rand from the living annuity. So that then gave him a net income of 54,000 rand a month. And the effective tax rate, so what the client's physically paying, is only 22.39% tax. So that's you can see it's a basic calculator, but we used Gravitas Tax to obtain that information straight from the client. And then how this increased the client's income is obviously his tax is much lower. The financial planner obviously got the deal against the other two financial planners because he just looked more financially astute. So so the client saving money, and also the financial planner has now gotten 21 million rand AUM. You can do your own calculations on what that will bring in on a monthly basis. So as Francois said, a lot of these tools, it's almost something we don't want to buy. We're paying every month for it, but there are examples where you physically can increase your revenue on a monthly basis and also still give good tax advice. So this is just our basic calculator. I know Francois will give us a bit more on TaxSpace, and you can actually generate a very nice report on TaxSpace to not show clients on Excel, to actually show a very basic report in a few minutes that you can further enhance your planning.
Yeah, but if I can just add on to that, I think in our industry, especially in the retirement space, there's such a big emphasis on fees and not necessarily to the value that's being added by the financial planner. And I think something that resonates with me as well, it's something that we maybe sometimes forget, is a client only retires once. I mean, we do this for a living. We're used to having those chats with clients, but it's a very personal discussion for them. So to be able to give them that security in terms of exactly what the taxes are going to be, so you'd rather add value in terms of the tax planning and then still justify the fee that you charge as a financial planning practice. And I can tie this into a good example, and I'll never forget this client. Was one of my own clients pre-Gravitas Tax. I was doing his retirement and we had a discussion. He mentioned something a couple of years ago that he received a golden handshake from his company and he's never taken previous withdrawals. I'm sure a lot of guys can resonate with that conversation with clients. Came to retirement. We submitted all the documentation. It turned out that golden handshake was a voluntary retrenchment. And as we know with clients, when something goes wrong, it tends to happen multiple times with the same client. And this client specifically ended up waiting 3 months for the directives to go through because his ID number and tax number was not up to date with SARS, which is also something you can verify with Gravitas. And there was also an IT88 attached to his lump sum when he actually retired from SARS. So he ended up with previous withdrawals, funds owing to SARS. And if we plan for, let's use the example of 550,000 as a tax-free amount, and all of a sudden the client has 200 or 300,000 less than we initially planned for, that completely throws out the plan in terms of the monthly income he needs, the debt he needs to settle. So once again, that was one of the kind of identifying points where we started investigating with Gravitas Tax, and we thought surely there needs to be a more clear way where we can carry this information over to clients.
The other thing there that's a big issue with that as well is not just the time it now takes to try and rectify this, right? And once you've applied for that tax directive, there's no going back unless there was a glaring mistake somewhere. Let's say, for example, somebody ticked the box and the provider processed the thing incorrectly, then you might have a case to have that thing reversed and then redo it. But in a case like that, once SARS said you owe us money, and they're going to go through with this. So there's no stopping it at that point. I think that's a very important part to just also highlight, that once you've submitted like that, and we've just had this like 4 weeks ago, somebody called me and said, sure, she's really worried because they did all these calculations for a client. They came out to this, and the tax was going to be 188,000. It turned out to be 300 and just over 300,000 in the end. And like, did she make a mistake? Was something wrong? I said, no, I can tell you now, this client did not tell you. They could not remember, because I just think about, I can't even remember when I withdrew from funds, and I'm in the industry, right? So I can't remember when. I know I left there and then I did this, but I can't remember exactly what I did and how much it was and all of that. And I think that's the problem that we all sit with, is that clients don't remember. And even if you ask, and I can promise you this, like Emil and Wouter, you can probably both vouch for this, to say, look, whenever something goes wrong and the client did not give you the information, it's still you. it's not them, right? So yeah, it's really important. We saw this quite a few times in our tax practice as well. where this has happened. And yeah, it's one thing if there's an IT 88 because the client owes money, right? That's a different story. But just getting the amount of tax wrong during the planning phase is such a critical thing. So I don't know if any of you just maybe want to just maybe add to that.
And it kind of resonates now with one of the examples that we also had where the client didn't tell us about his previous withdrawals. And now that you mentioned, I actually think back, he completely said it's my fault, but how can this tax be wrong? And I'm thinking, it's not actually my fault. He didn't give me the information. So it's unfortunate our clients think, and as Emil said, it's they retire once. So it's for us, it's a normal thing. It's like a doctor doing a heart operation. It's like just another heart operation, but for that person, it's a heart operation. So yeah, it is. It's quite daunting, especially you only retire once, as Emil said. So yeah, that's exactly what Gravitas Tax do. Just making sure that we as financial planners have all that information. So yeah, so basic as that.
Yeah, Francois, if I can just tie that in, you mentioned the IT8, and we briefly spoke about that as well. Obviously, with the new regulation, with two-pot and everything, the savings pot withdrawals, that's something big that we've actually noticed. And with Gravitas Tax, we're also providing for simulations from that savings pot withdrawal currently. So something very interesting that we actually picked up is the way that SARS are implementing that IT88. It's very different from a normal, let's say, pre-retirement withdrawal. Compared to a withdrawal from the savings pot. So we've seen clients with outstanding IT88s on a normal withdrawal simulation. Then it's not on the savings pot withdrawal, and it's actually, we've tested it. The client might be owing SARS funds, but they actually don't deduct that from that savings pot withdrawal. So that's also a very interesting point to notice that SARS are also implementing these things differently. Obviously, as time goes on, we'll have more time to test and see how they actually implement all of these things. But that's just something small that we've already picked up in terms of probably the backlash they would have received deducting IT88 from smaller two-pot withdrawals, savings pot withdrawals.
Yeah. And all that we do there is we just show exactly what's in SARS system. So sometimes, yes, the information that we display can be incorrect because it's incorrect at SARS. And again, a real example of that is a client sold their property. Again, a practical example of one of our financial planners. They sold their properties and the SARS put the base cost of the property at 0 and not the actual true base cost. So immediately that generated an IT88, which is incorrect because the real base cost should have been loaded. So we saw it displayed in IT88, so we displayed in IT88, which warned the client that they must investigate and take tell us what's going on there. And yeah, Francois, sorry, I forgot to ask you. I actually want to know a bit more about TaxSpace because that calculator is not always the best to show clients on an Excel. It looks a bit unprofessional. Where on Gravitas we generate a nice PDF and it looks formal. And we actually had a client this week that he said he doesn't want to go ahead until he has a tax director from SARS. So it does create a bit of confidence to have a nice PDF, show SARS logos and stuff. So yeah, I would want to actually know a bit more about TaxSpace. Now, honestly, don't know, but because I've missed your new functions that you have, so I would like to see what's going on there.
Yeah. So I just want to ask you this, Wouter, quickly. How many, and you didn't know I was going to ask this because it just came to me in the moment, like most things does. How many opportunities do you think there are from a client's tax assessment? Like just a normal annual tax return that they submit. How many financial planning and other opportunities do you think there is to be found there?
So if you say opportunities, is it in terms of how you can optimize their tax? Like they can take a time opportunity to lower their tax. I would think that's one. And maybe they say another 5 that I can't, no, maybe not that much, maybe 4, because I know in income tax it's only like 3 or 4 basic things that you can do. Yeah. How far am I out?
And mainly from a tax point of view, that's sort of value adding stuff, because that doesn't necessarily mean opportunities for you as a financial planner, but you are adding value to the client, right? So you can help maximize their cash flow basically from that point of view. So there's up to 9 opportunities that you can find just in a client's tax assessment. And that's just the other thing that we saw. There's like, let me share a slide as well. I also want to share a slide. Let me do that, because the main premise and probably the main reason why I opened with asking, how do you think about your technology, right? And what problem is it solving? Because talking to a lot of financial planners and financial planning businesses, you can clearly see that client acquisition is probably the biggest challenge for most people in today's environment, right? Cold calling is much harder than what it was in the past. Clients are so tuned out to all the same kind of messages. It's harder to find the right clients. Everybody is telling us that referrals are the best thing, that they don't do nothing, they just work on referrals, and that's absolutely fantastic. But client acquisition is still the main thing, and whether you're just starting out today or whether you've been around for a long time, we can never stop acquiring clients, right? You never get to that point unless you plan to close the business down. Then at some point, I guess you don't want more clients. But other than that, if you want this thing to live, you need to acquire clients. So client acquisition is a big thing. And then also, like, from the other end, and this is sort of where Gravitas obviously plays a big role, but also so does TaxSpace, is to support the planning process. So on the one hand is to really use the correct information and have the right information available to you. One of the biggest issues that you will find in a financial planning tool specifically is that it asks you for a tax rate. Some of them do calculate their own tax stuff, which is phenomenal. Many of them do not, and they ask you for an average tax rate or just a tax rate or things like that. And getting to that, I mean, you saw what happened to that example that Wouter just showed, like how much they reduced the client's effective tax rate. And that's the rate you want to use in the planning. You don't want to be using their marginal tax rates. But now from a planning point of view as well, you sit with, and we saw this over and over and over again. And SARS did change that rule as a result as well, not because we saw it, but because SARS just knew this was a massive problem. When somebody retires, suddenly they might get multiple streams of income. So they might get a pension directly from the pension fund, for example, but they also had retirement annuity. So now they also get a living annuity and maybe a compulsory life annuity or a voluntary annuity, or maybe there's some trust income that comes in, things like that. And suddenly there's multiple incomes, and these things don't get taxed correctly. So we often found that clients are having to pay in on their first tax return. They're going, what's going on? Or the client was so conservative that they only wanted to put their money into a fixed deposit, money market, those kinds of things. And then suddenly the interest is taxable, and they even if you told them when you planned, they still didn't put the money away. And then they're very upset because why must I pay 20,000, 30,000, 50,000 Rand in tax? Whereas, when you use these kinds of tools and it shows you exactly what's going to happen, and it's so quick to use. So one of the problems that they solve as well is not only client acquisition through those 9 opportunities, but just analyzing somebody's tax assessment. You also use it alongside the planning to make your planning more, in line. And this is the big thing. And Wouter and Emil, you can probably attest to this, that in today's environment, there's a massive move away from the technical, more onto the person and their goals and their aspirations and like having all those conversations. But the technical is never going away. Like if you plan, you got to plan correctly, right? Because that's a massive thing. The other thing is obviously retaining clients. So how are you adding value? What are you doing that other planners are not doing? What reasons are you giving your clients to stay with you? So retention is another problem. Obviously, revenue generating. I'm going to get to Marta in a second. Marta is like that. That's what they do. And there's many questions around revenue management. So, but understanding your revenue is a problem, because if you look at your accounting, like your financial statements or your accounting software, I mean, that's historical, right? It looks backwards. It doesn't tell you much. I think the best you can do is maybe split your incomes per company. But it's going to be very hard to really build an accounting system that really digs into the detail around where your income comes from. However, accounting is great at showing what your expenses are, right? So to have a breakdown on that. And then the other thing is like, how do you foster engagement with clients? In other words, when you sit there and you have a conversation with a client, they actually talk back with you and they debate with you and they ask questions and they're really into the conversation. They're not just sitting there and going like, yeah. And then at the end, they go, Francois, I don't know, you're the professional. I'll do what you tell me to do. I trust you. Like, those things are really dangerous places to be. That's a massive red flag for me. So these are the 5 major things. And if you just have a look at what all of us do, who's on this call this morning, we address multiple of these problems through what we do. And that's the way that you should be looking at technology. And obviously today is a lot about revenue generation, right? So, I mean, Wouter gave his first one. Let me give you an idea around sort of what TaxSpace does. So we've had quite a few people that the simplest things. So just think about opportunities for clients. Just look at your existing client base at the moment. When you take everybody's got access to the IT34s, the tax assessment that gets issued once you've submitted your tax return, and everything is on there. This thing is like a mini F&A. It will actually go and do all the calculations every time. It looks for all 9 those opportunities. Now, it doesn't always find 9 opportunities. It does depend very much on what they do. But it finds opportunities and it quantifies those opportunities. So it's almost like a mini F&A without you even needing assets, liabilities, any of those kinds of things. You just work with what SARS got. Now, the big thing that we've seen is where you tell a client, like, look, let's talk about your tax. Are you sure you're not paying too much tax? I mean, I still have to come across a client who doesn't want to talk about that. And you can change the conversation. You can have a different line of conversation. But anyway, so those are some of the things I think that are very important to look at. But Martha, I mean, you've been sitting there listening to the 3 of us rumble on, and I won't say mumble because I think we shared a lot of valuable stuff. But I mean, the revenue management side of it, there's many people on this call who's going to go like, yeah, but I get my commission statement from wherever, or I just work for this one company. Everything comes from this one company. There are people who say, no, but I'm an advisor in a business. Like, that's the business owner's problem, right? So tell us a little bit about, the importance of revenue management and the value of revenue management, and maybe a story where, that maybe you can share where people really had an epiphany and sort of changed their business.
Yeah, thanks, Francois. I just thought earlier when Wouter was speaking about the heart surgery, that seriously, what you guys are doing is like Barry Mahoney always says from Gravitas Tax, you the health practitioner for the finance for people. It's seriously a massive responsibility, and everything you guys are speaking about, in the end, the individual out there think, okay, you should have known, you should have. So to have the kind of tech that can tell you before and like you said, they might forget. So very interesting. I think it's extremely interesting and so many opportunities, which is wonderful. So from Commspace's side, what we do is we understand your consolidated revenue, right? So it's quite important you can, from your bank statement, understand you get $1 million, 2 million, whatever into your bank account, practices account, but we then can tell you where does it come from exactly, from the provider, which product categories, which commission types, which is upfront, which is recurring, and then per client. So you want to know each of your clients, what revenue do you monthly earn from each of your clients. You can segment those clients in Commspace, Gold, Platinum, Silver, ABC, whichever you want. You can also group your clients and understand that client segmentation with regards to groups. So there's a lot of insights that you can have, but you obviously want to understand opportunities. So those can be 2 ways, new opportunities, so how to cross-sell. So you will then understand, okay, these clients of mine, they've only got life cover. They haven't started saving. Or which of my 20 to 30-year-olds haven't started saving? So there's a way to dissect information inside Commspace that you can know age, gender, income, per product category, and then you can maybe identify cross-selling opportunities. Because in the end, you might have an idea that people have products, but if there's no revenue flowing, then maybe that product stopped, or maybe, I don't know, Section 14 transfers, sometimes those authorization docs weren't signed. And even that, we've got a very simple way of you identifying those. You've got a tick in Commspace. Is it a Section 14 transfer or not? Yes, no. What is the inception month? And then you can run a report to tell you, go next month, you must make sure these needs to be signed. Or you can run a comparative report to tell you, was it paid or not? So it stopped coming in. And there are many ways to pick up money. People do pick up. That's not obviously the focus of Commspace to show where providers haven't paid you, but we do pick it up. Especially, some clients you've never charged. So somehow the percentage wasn't loaded by the provider. We can pick that up. And then obviously, for example, risk. Just run comparative year-on-year monthly reporting. So just choose the month of September, run what came in last year. Did it come in this year? Last year, maybe it was the first year. Last year, maybe it was the second year, or ACI. So there's lots of ways of dissecting and getting information out of a system. If you have that consolidated system, it's extremely hard to try and compare Excel spreadsheets to each other. Some people are very au fait, and they might be brilliant at building these beautiful Excel spreadsheets, but it's also, you have to start from scratch every single month to try and, analyze that, except if you can build macros, then you may. But we've got a few very sharp, especially one Lat there on our side, he builds beautiful information in Excel, but it's information that we draw from Commspace and we pull it back so that we try and make it as automated as possible for you to find the revenue that is due to you that maybe didn't come in. What we do find, so we don't often find mistakes necessarily made by the providers. It's omission. Oh, geez, I have to tell you about this mistake though. So sometimes you pick up where you weren't paid, but sometimes you also pick up where you paid too much. So we've got this client that the percentage on the ongoing advisory fee was loaded too high, and he had to tens of thousands of rands he had to pay back. But what's amazing is he picked it up. The client didn't pick it up. So because of Commspace, he picked it up. And that's a much better position to be in, to tell your client, there's a mistake from the provider, I'm refunding you, than them picking up, you've charged them or you've overcharged them. But the one thing we almost always pick up, say 60% of the time, is VAT. So when we onboard clients, we will find that they've never been paid VAT from some of providers. So they've got 10 providers. Most of the time, there's one or two that somehow that VAT tick wasn't implemented on the provider side, and they haven't been paying you that VAT, but you've been paying the VAT over. So there it's hundreds of thousands we've picked up where VAT was incorrectly applied. I'm going to think a bit more, Francois. Are there any questions or anything else that you wanted to mention?
Yeah, I do know that I mean, Wouter, you guys actually, because I know you also users of Commspace. I know you also had a thing that you picked up, and just before Wouter sort of talks about this, maybe is that we also, like when I was a broker consultant many years ago, like same things you often had where it's on the application form, but it doesn't get loaded, and then there's just no way to pick it up from a commission statement. There, you've got to go do very specific things in order to pick up and see. But the other thing I think that's very important is, when I was, for instance, looking at my business, I don't have a financial advisory practice. I have a training business basically. And we looked at it, at our revenue specifically last week. I was going through the revenue in detail because we're so focused on the cost and, are we paying too much? And are we, what, it's much easier to make more money than it is to cut costs sometimes. So I always start there to look at the revenue, because if I can manage my revenue, then everything else is much easier. It's one thing to focus on. It's one strategy to have. And all you need to make sure is that you stay within the budget that you've set for yourself. But by looking at my revenue, there were two specific months that were just way outside of the others. Like, what happened in those months? Like, in a good way, not in a bad way, luckily. So the others were very much in line. You had these 2 uitskieter maande, but you like, what's this? And I looked at what we're doing and I say, we need to do more of that. So it's sometimes as simple as that, Martha, that there's something that the revenue tells you that you will never in your life pick up looking at profit, looking at costs, looking at any of those things, right?
Mm. That saying that what they say, you can't save yourself rich. So it's much easier to drive the top line, right? If you can understand the top line, you can drive it. But if you don't start by having the insights and looking at it intensely every month, then, it's difficult to know where to start. You've got to have the information to start.
Yeah. And I think we sometimes also lose focus. We onboard a lot of new clients, focus on their planning, focus on acquiring new customers, but then after that, we kind of forget to manage that revenue part. And like I said, that's actually very important. And just practical how examples that we got from Commspace, and we are to a client provider, so we only have one insurer to check, is one major thing we picked up. There was one client that we weren't paid on for about 6 years. So the provider had to pay us 156,000 once off for that provider, for that client. So that was obviously very nice.
Yeah. But I think it goes both ways. Martha, with the example you used where the advisor unfortunately needed to pay in the ongoing commission where he actually received more than he should have. But I think it gives you that peace of mind to know that everything is actually as it should be. You're all being paid for what you should be. And if you shouldn't be paid for something, you also have that peace of mind. So I think that it gives you a lot of that.
But in terms of the management of the clients, like we said, we focus so hard on acquiring new customers and getting all our stuff ready that we forget about the revenue that we've already put on the books. And one example that Martha actually just mentioned is the Section 14s on the RAs. So as you know, if you move it to a life or move it to another LISP, specifically the time annuities, will generate a 1-year commission renewal form. So each year you have to sign this commission renewal form. So we manage our renewal forms also on Commspace so that we can, before the time, speak to the client, do the client's review, make sure all the tax is in place, and ensure we sign the necessary forms to keep on being paid for that client. Otherwise, we actually taking the advice risk, we doing all the advice, but we're not getting paid. And like we said, today's focus was specifically also to share some revenue ideas because we pay all these things on cost. We do need to increase our revenue. So I think we've been with Commspace about 6 or 7 or 8 years now. And in essence, we've never paid you because you've gotten back so much money back then. So Commspace is actually free. You don't pay it.
Yes. And that is, we also find, I mean, and we are working towards, pushing insights to clients because what we, IFA is what I mean is because we found that, you build and you're so involved in the detail of the tech and of the solution that you think it's obvious. But what we've really learned in the last in the last year or so is that we have to bring the information to people. We think by building the beautiful analytics and the beautiful reporting that people will know what to do with it. But you're also so busy in your practice doing what you're so used to doing, to look at things differently is new. So you don't even know what you don't know, and you don't know how to look at it. So we are earnestly working towards being able to make that reporting of such a nature that it'll scream at you, that it'll be so obvious for you to see where the opportunities are, what you're not getting, insights. So hold me to it.
That will help us a lot. That we just get kind of a one-page or a report to say, these are the things we look at, because as you said, we do get busy. We forget about the running of the revenue system. So it will help us a lot if we get it like very basic, say this way. Yeah.
Great.
I think just maybe as a side note, so we're busy with quite a big project at the moment, and it's all about growing financial advisory businesses. I mean, that's what it's all about. And one of the biggest issues that we find, not only with individual advisors within a business, but sometimes for the business itself as well, is obviously that financial management side is the one thing. But then also, like we've been talking a lot about, client segmentation. I think a lot of people think it's like I've got categories, or I've got it's age bands, or it's income bands, or it's maybe profession. What type of business or career do you have, or job do you have? Those kinds of things, and those are the tactical things of the way that we used to segment back in the day. For me, it's much more important that you have a philosophy around your client segmentation that you can apply consistently throughout your business. Doesn't matter whether the person is a doctor, whether he's a business owner, whether there is a philosophy that you can apply, and then based on that, you can put people into certain value propositions within your business. Because I think we all think we have one value proposition. Now, why am I saying this, Francois? Like, this is something about something completely different. But it's very important that you can't really craft a proper philosophy for yourself if you don't know your business's information. And revenue is a critical part of that. We're talking about valuations of businesses. Like, how do you drive the valuation of your business? How do you make sure that you build an efficient profitable but sustainable business. Because ultimately, yes, we're here to help people, but if your business doesn't survive, then you can't help anybody. So all of those things are heavily predicated on your revenue numbers and understanding your revenue at a client level. Like we so typically look at revenue from a product level, right? I get so much ongoing, and I get short term, and I get medical aid for those people who are brave enough. So that's what we typically look at. But can you easily today tell me exactly who your top 50 clients are? Can you tell me what you earn from them, whether they're profitable or not? Sort of what is share of wallet? Where are those revenues coming from for that client? And can you tell me how much potential there is with that client? And again, I think it's got much more to do with revenue than it does to do with, oh, this client doesn't have a medical aid with me. This client doesn't have short term with me. I think it's actually much more than that. And this is where that's the problem that you're trying to solve. Going back to my example of just looking at our 12-month sort of revenue number, saying like, what happened there? And then going into that and seeing, but where did that come from? What generated that? And so, but we can actually do, if we do 2 more of those, I can probably, like for a change, not work in December, for example. So those are simple decisions to make, and where energy goes, where your focus goes, right? So when you focus in something specific, that's where your energy goes. So these are all sort of little things that make your life a lot easier and your decision making a lot easier, which I think is also important to add there. Anything else anyone wants to add before we maybe look at some? I see there are some questions. If anybody's got questions, please put them in the chat. I'll pose them to the panel. But anyone wants to add anything before we do that?
I think just some closing thoughts, and I'm just thinking of your wheel that you shared earlier, Francois, the acquisition, and we sometimes focus on the acquisition a lot, but I'm just thinking now out loud, if you use our 3 tools, you should be able to almost look inward into your own clients. So just 3 examples, and just thinking of it on bed, so correct me if I'm wrong here, Francois. So to start from a Gravitas Tax, some of our financial planners, for each client, every time they see them, they draw a report. Not to specifically just think what's a tax on retirement, it's an early warning system. Is there something wrong on IT88? When they review their living annuities, can they maybe not do one-day RAs and increase their book? So it's literally draw a report for each one, think of how you can apply that. Same thing with TaxSpace. Not go try and acquire new clients, just look inward, each client, do a TaxSpace report. And just in that client base, even if you're just starting out, you have 10 or 15 or 50 clients, you do this for each client, you're going to see opportunities and also better their tax planning. And then from Commspace, all this additional revenue that you've made, just manage it, make sure that you are getting paid for each client, segment properly. I like the philosophy thing, because you start with revenue exactly, and then you have to apply your philosophy, like earning out of this client, I'm not earning out of this client, and this client means a lot. So I agreed with that. So yeah, I think sometimes we don't actually have to focus that much on acquisition, but maybe look internally to our own clients and just improve their planning, and thus also improve our revenue in the case.
Something, Francois, that you mentioned that stuck with me is our interaction with clients. It's much more emotional compared to a technical one. But it kind of, in my thoughts, is that's I 100% agree with that. But if that technical foundation is not accurate and true, the emotional one falls down, the retention falls down. And I think I can tie that into Commspace, Gravitas, and with TaxSpace as well. If that trust, like with Commspace, if that trust between the advisor and the provider is not there to know that that information is accurate, the emotional relationship starts to break down. I think, should I be paid for this? And by utilizing all of these tools, I think that's something we can all solve.
Yeah, absolutely. And I must just say, saying that I absolutely agree that we need to think about sort of the value that we add, to our existing clients first, because existing clients are much more forgiving. Like if you're still learning sort of some of these things, it's okay. And they'll be open to talk to you and they'll give you honest feedback, before you even go look for other clients elsewhere. I think that's also very important. Martha, anything you wanted to add before I look at the questions?
Yeah, I totally agree with Emil with regards to trust. So even if you're in a practice where you manage a few people, a few IFAs that's in your practice, it's for them to know there's transparent, clear, exact revenue, and they don't have to worry about it. And there's no insecurity and unsureness about where exactly is my revenue coming from. I think that helps a lot. And a tool that can give you management information to be able to understand new business, existing business, lapses, growth. It's maybe sometimes just much easier to manage a practice or any business. And then the old saying of working on your business, not in your business. And if you can have tech that can help you to work on the business because you don't have to crunch the numbers and spend hours understanding where it's coming from, then obviously that's the answer. So I think so. It was very interesting, and thank you so much for all the insights from all three of you.
Nice, thank you very much. Alrighty, so let's see some questions. So and I think this is also an opportunity for us to also maybe position, like exactly what we do and what we don't do, because people hear the word tax and you think we can solve all the world's problems with regards to tax. Not necessarily. What we do is make things a lot more efficient and easy. So just we don't have magic wands. I've got Gandalf here in the back, but he even can't help sometimes with SARS. So the question from Andrew is, can Gravitas help with a mistake by an insurer that put through a withdrawal code for a big section 14 and then SARS taxes the client? To get this process reversed is a nightmare. Any tips or guidance on that maybe? If not, also okay, but
Emil?
Yeah, so our ties as Gravitas sits directly with SARS, so we kind of reflect what they have on their side. So issues like that we can solve is if a client's ID or tax number is not up to date with SARS, it will prompt you that information. Or like what they mentioned earlier, if the information is incorrect on the SARS side or by the provider submitting the information, that kind of sits outside of the Gravitas space. But if the information is incorrect with SARS, Gravitas will reflect that, and it's then obviously up to the advisor to take it further with the client to say, listen, that information is not correct, and that's actually a SARS issue.
Out of an insurer point of view, we can't unfortunately cancel directives or change any one of that, but we can maybe just give you some guidance what we've got from other financial planners. Firstly, it's actually not it shouldn't be a difficult process. It's just normally that insurers don't like cancelling directives, so the guy that made the mistake won't correct it, they need to go up to management. So it does sit on the servicing side. So I would start by phoning your servicing department, and then they can actually take less than 24 hours to cancel a directive, reverse it, and reapply. Because they have like a bulk where they pay over the taxes. So it's actually not a difficult process. I would just apply a bit more pressure on the servicing department and just straight go to a manager, because only the management of the servicing department will be able to cancel the directives.
But with queries like that, we usually try to assist as far as we can in terms of referring to the correct contact person. But in terms of positioning Gravitas Tax, I would look at it as a planning tool. So it helps you to get that information upfront and plan according to. We don't sit really on the processing side of it, even though we do answer queries like that and try to assist where we can.
Thanks. All right. The next one is more of a comment, but I think it also goes, it's important to mention this. I do want to mention this. Christian was saying, I've seen that some clients doesn't even always know what amounts to a previous withdrawal or their previous withdrawals, because they only consult with HR when leaving an employer and elect to receive the cash without being duly advised as to the terms and conditions of such cash withdrawal. So, I mean, this is basically just, I'm going to leave. HR says, yeah, you need to complete this form O, withdraw, tick, and it just goes through, and they never ever speak to anybody. And then they don't remember that they've done that. Obviously, then when they do get to a stage where they get advised, then that information is basically lost and only picked up later when nobody knows that. Warren says, good one opportunity. Yeah, sorry about that.
Sorry, Francois, I'm interrupting. Yeah, it's what we've actually done there with, like, out of our financial planning businesses, we started building relationship with our HR. So on the corporate fund or employee benefits funds that we have, we went to each one of those HRs that deal with that queries, spent an hour with them, upskilled them, because the HR, they don't understand the tax side. We actually also specifically spoke to them about Gravitas Tax to tell them that this is actually, just to put that a little bit of more responsibility on them. These people have been working for 30 years, 20 years, 40 years. If you just tell them, click the withdrawal form, you are actually affecting them. So all that you do, send us to a financial planner. We'll talk to them free, no charge, just to help them. Or at least do a report to show them that, look, yeah, this is, because in a lot of cases, they see that tax amount, they're like, so it's just to almost upskill our HR industry as well, if you want to say that.
And it's also to the benefit of clients. I think we've all had this example where our client contacts you and they tell you they want to preserve the funds, and then you ask them where's the funds, and they'll tell you it's in their bank account. It's not it's just a lack of understanding and knowledge. It's nothing down to them. So by trying to upskill the HR department, the funds, that sort of thing, we try to send a simulation as part of the withdrawal pack, so the client can actually see what the tax is going to be before they go through that process. But yeah, that's not on the Gravitas side. I think that's more how we try to implement it in our personal businesses.
Brilliant stuff. Could one opportunity be tax debt in your estate being covered by risk cover? Yes, it is, Warren. So what we do with TaxSpace specifically, so as I said, there's 9 opportunities. So what we do is we've built algorithms for death, disability, and retirement. And it goes and looks, depending on the information that's there on the tax assessment, it will take that and actually quantify an amount, or it will determine an amount that is lost to the dependents, and it depends on the different scenarios. So those amounts are not the same throughout. And then it will give you then sort of, prompt the client around how much capital they would need in order to replace that income for their dependents or for themselves. And then it would also go and say, but also then there's your debt, there's this, there's that. Now, obviously, remember, in TaxSpace, we don't know what the debt is. We don't know other liability. We don't know anything other than what is with SARS. And these days, you can't hide anything from SARS. So we're just working on income here. We don't know their expenses. We don't know like any of those kinds of stuff. But just based on that, and then there's a big question there that asks them, what about your debt? What about your executors' fees? What about possible additional taxes, et cetera, et cetera? And then the big question is, do you have enough cash to actually cover that? So that is definitely one of the things that we look at. Does any of you, if I see the word GEPF, good luck. Does any of you have contacts to make GEPF more efficient? Takes forever to transfer members' capital to preservation fund. I think it's the nature of that beast. Wouter and Emil.
Yeah, it's a difficult one. I think even on Gravitas Tax, all that we do there is we built a very intuitive calculator. It's not a simulation of SARS because it's Formula C, but we've built a very basic calculator on Gravitas Tax to at least make the beginning process of GPF easier. So it gives you a nice PDF report, shows you how much is tax-free and not tax-free. In terms of getting that through to that department and getting those things transferred, it's an absolute mission. We have a specific lady in our office that she literally almost irritates them till death, that when they see their call, that they just transfer the funds. But it is so yes, we can plan, but we can't help you with that beast, unfortunately. If you find out, please share it with us as well.
Yes, you can sell it for weekend money. All right, so I always say there's time for a joke. Andrew said, you guys are all just doing so many good things for the industry. Would like to take additional training with all 3 products. Great stuff. Thank you very much, Andrew. There is a question on the cost of Commspace. I would suggest, Martha, maybe just explain the difference in the 2 costing models, and then, obviously they can be more discussed offline.
We've added costing models. We've got 4, but in essence, it's self-service. So where you manage Commspace yourself, obviously we will make sure that your data is correctly uploaded into Commspace. We call that onboarding. So the onboarding and the training and the support and the reporting, it's all included in the 630 Rand, excluding that, per month for per advisor. And if you want us to do everything, it's 1,900 Rand, excluding VAT, per month per advisor. There is something in between there, and there's something else for tied advisors, but please contact me directly, and I'd love to take you through all the details.
Cool stuff. Thank you very much. Andre says, is there any way to get better policy docs besides using a steward? Watch this space is all I will say. Rian Labaskachny says, just love CommSpace, made my work a lot easier. Thank you very much, Rian. I'm sure Martha is smiling big right now. Voter mentioned 3 tools. I know of Gravitas calculator. It's not a calculator, right? It's a simulation tool. What are the other tools? Please send it as it's available to all FPs. So I guess Warren, he was speaking about CommSpace and TaxSpace in that sense. Was there anything else you mentioned, Voter?
No, I think it's this 3. If you take Gravitas Tax, you do the simulation to see if there's any surprises. Then you take that same information from the client. We do a TaxSpace report to see the 9 opportunities. And then afterwards is we took our whole book, and that's something that Martha can also share a bit more, import our whole book from the different providers. So investment houses and insurers onto CommSpace. That generated a report for us to say, these clients are you're not getting paid on, and then we generate a few more reports. But from that, we then took and phoned those clients, reviewed them, set up why things are not right. So out of the acquisition, we looked internally, improved our clients, improved our revenue on the Gravitas Tax side, and the same thing on Gravitas TaxSpace, and then the same thing on CommSpace. So those are the 3 tools I was referring to.
Awesome. Does CommSpace do commission statements for a brokerage, Martha?
Yes, for sure. We are not a payroll system, so we don't do the tax calculations, the PAYE, etc. But absolutely, we have beautiful commission statements that we provide to individual advisors in a bigger practice to support what you're being paid in detail.
Yeah. Thank you. Barry asked, is there not a possibility to find a record of all previous withdrawals on SARS e-filing? No, as far as I know, because you can't have tax. I'm not sure, Voter, if there is a way to find the previous, because the only way would be, I would assume, would be previous tax directors.
There is a way. It's very manual, and if that ever pops up, so we've used it in some cases. So what we do is we draw everything from SARS, supply a report, and then maybe out of 1 out of 1,000 clients are not happy and they're not sure. Then we go help that client with, obviously, the advisor. He does most of the work to explain to them where on SARS e-filing you can go find your history. It's a very tedious process to try and find where, like, a client has made 5 previous withdrawals, explain to them that where they can see where the 5 previous withdrawals. So yes, we can prove where Gravitas information comes from. So yes, that answer is
I think
yes.
it's also important to remember that sits on the client's e-filing profile. So if you're not a registered tax practitioner, it's a bit of a gray area to assist the client with that.
Good point.
Thank you very much. Yeah, I also missed that one. Thanks, Emil. That would usually be my go-to first thing. But you're a tax practitioner, because otherwise you can't see it anyway. And to ask a client to go look for it is also going to be fun. So definitely.
And if you ask the accountant, what I've learned is they go check for you, but then you get the previous tax life and you get the invoice right next to it, because it takes them a few hours to get information.
Yes, absolutely. So please briefly share the 9 opportunities you alluded to from a client's ITA 34. There's a whole webinar that I actually do on that, or that I did on that, which is available on Propulsion. So you can go have a look there. To mention that off the top of my head now, it's going to be, I can share some of them with you. Obviously, it is on the one hand, maximizing your retirement fund contributions. The beauty about that is that we don't only show how much you can still contribute, but also if you do, what does that do to your capital at whatever age you choose to be the retirement age, as well as the additional capital that you can generate if you also reinvest the tax refund, and also what that does to your income at retirement. And we show that now in both present value and future value terms, so you can choose between that. It obviously calculates, it shows you what happens to the effective tax rates. It helps you plan for risk. So there's the different risk events, as well as planning for retirement. There's a whole section on that. It also, one of the other things it does, it will look at and this depends very much on how somebody's remuneration is structured, but it will actually show you how you can restructure by maybe reducing, for example, let's take a travel allowance, for example. If somebody has a travel allowance, you often find that people cannot, because you cannot claim more than what the allowance was that you received. So if you receive 60,000 Rand for the year as an allowance, but according to the tax table, you could have claimed 100,000 rand in tax. You can't, not in terms of you could have reduced that the cost you could claim was 100,000. You can only claim the 60,000, right? You can ever only in anything, like same with retirement annuities, you can only claim your maximum deduction might be 100,000, but if you only contributed 20, you can only claim 20, right? So you can never do more than that. But that will then show you what happens if you, for example, reduce your salary and increase your travel allowance. How much tax do you save and what difference does that make? So it will show you those kinds. So that's more of a value add. But again, that cash flow that you open up can be used to pay down debt or to contribute more to a retirement fund or whatever that may be, or just go on holiday. It also looks at taxable investment returns. So it will prompt people on that. It looks at medical aid, gap cover, tax-free savings. So there's a few of those kinds of things that it also looks at for opportunities. And there's other things that we explain of how you use it, not just from an assessment point of view, but during planning. Because one of the biggest things that when somebody gets to retirement, the big job really is, apart from making sure that they can do the lifestyle that they want to do, is that you want to maximize the net income that hits their bank account, and you want to minimize the withdrawal rate. So in other words, like the percentage drawdown, you want to minimize that because you want to draw down as little as possible, but you want to maximize whatever you get. So how do you balance compulsory and voluntary or discretionary money with each other? So we use it in all sorts of ways for that as well. And then a funny ending would be GPF systems are down at the moment. Yes, very difficult to deal with them. Thank you, Arun. But anyway, so thank you very much. Any last words, guys? I think that's the end. It's 10 o'clock. So thank you very much for joining us. Martha, bye-bye, donkey. Emil, Wouter, bye-bye, donkey. Really appreciate it. It was great having this discussion with you guys. Hope you all got value. The recordings will be made available as well. Keep an eye on your email. And with that, we all wish you a fantastic rest of your week. Thanks for joining us. And get in contact if anybody has any questions. We've all got websites. You'll find us. And LinkedIn, of course, is the other way. But thank you so much. And we will also include our details in the email. So thanks so much.